Hello traders, welcome back to another video, welcome back to the channel. I'm so happy that you guys are always tuned in to get the new videos that I always put there. So today we are back again with another video about the setups that I always teach. I told you on this channel I mainly focus on how to get you into the market. How do you get into the market? Because I discovered a lot of upcoming traders out there know how to do the analysis. They can determine the direction of the market, but they don't know how they can get into the market. Like, what is that trigger? What is that thing that makes them enter the market? Because you can know that this market is in an uptrend, but it doesn't mean that in an uptrend the market cannot sell. It doesn't mean that as long as you buy and you're in an uptrend, you're guaranteed of winning. However, you have to know the precision, where to enter from, where to put your stop loss, and what to expect, a realistic expectation out of the market. So with that being said, I'm going to teach you a very simple setup. People who trade demand and supply, a very simple setup, which is rally base rally. Only that setup today is what I'm going to teach you. This is a setup I've taught before on the channel, but I found it that I have to re-emphasize this because many people actually do not know how to enter the market. They can make the analysis, find the direction right, but they don't know where to pull the trigger from. So you see the setup here, rally base rally. It simply means price moves up, it forms a base or relaxes in momentum and then proceeds massively to the upside. So what do? You wait for price action to come back to this area, tap into this zone, and then go to the upside. You target the previous high. So your entry model is like this. Put here your entries, stop losses slightly below the bottom, and then target the high. That is a clear one, is 2 5. Just like that, and you have your setup. So what do? You go to the market and look out for only that setup. Very simple setup, and I'm going to show you on the chart. You see how simple it is and how you can benefit from it every day on the chart. Okay, so now on the chart we have GBP, JPY, and this is the 4-hour time frame. Last time I told you GBP JPY left here demand zone. The move was very good to the upside. It broke the previous structure. The demand zone was good, and look at the reaction it gave when it reached there. So now the first thing I'm going to do with you guys is I'm going to help you identify valid rally base rally demand zones in this leg here, in this price action here. This leg here, this one is what I mean. I'm going to help you identify the valid demand zones in this price leg here, and then we identify also, after identifying the valid demand zone, then we identify the valid rally base rally demand zone. So what is the first thing to do? We are going to mark out all the demand zones, rally base rally demand zones in this leg. So the first one I can see is here. The first one I can see is here. Price went up, a huge move to the upside, rally, formed the base of how many candles? 1, 2, 3, 4 of 4 candles, and then short to the upside. You mark this area very well. Good. That is one. So the second one is this area here. Very good. Demand zone, rally base rally. The third one is this area here. The fourth one is this area here. Okay, so now they are done. How many rally based rally zones do we have? Sorry about that. We have 1, 2, 3, 4. So now as price is moving to the upside, your job is to identify these zones and mark them up very well. Just identify the zone and mark it up. Then wait for price to come into that area and execute without fear or favor. So now price has broken this previous structure. This is lower low, lower high. This is lower low, lower high, lower low. Then price came, made a rally, a base, a rally breaking this previous structure. Which demand zone broke the previous structure? This zone here. So you enter, you put your entries there, or wait for price action to come into that area. But it is better you put your entries there, stop loss slightly below, and then target the previous high, which is here 1:2, but this one will proceed up to 1:8, that is 290 pips. And look what happened. Price went up, came back and tapped into the zone, sniper entry, and immediately tapped into the zone, it turned around. Price bought up to there right now 370 pips. 1:10, guys. 1:10 with just one simple setup. So that is one. So let's identify another one. This one we have used it, so we delete it. We don't expect price to buy in using that zone anymore. This one was a valid one, but it was not used. Why was it valid? Rally, base, rally. Very good mover, engulfing candle, indecision candle with the rejection. However, price did not come back. Also this one, rally, base, rally, engulfing candle, 4 basing candles, price did not come back. We delete that, and that is going to happen. Sometimes you identify the zones and price will not come back, so don't be frustrated. Don't say, oh, the thing is not working because price does not come back to the area. No. You just have to keep on waiting. So now look at this one, rally, base, rally. Very good move by 1, 2, 3, 4, 5 candles, breaking the previous structure to the upside. And not only broke this one, it also broke this one, so making another higher high. So you put your entries here, and then stop loss is slightly below. So that one would be 55 pips, and then target the previous high, which is 1:2, 2.3, 137 pips. So price would come, tap into your zone, and then take you to the take profit. So by now you would have been in 137 pips, 137 pips, guys, with just one setup. So in this leg here, from down up to up, you would have gotten 2 trades. One trade here that would push you up to up, and then you get another trade here that would now complete up to that level. So you see, guys, how it is simple, very simple, straight to the point. You don't need to complicate things. You just have to understand which setups and how or when to trade them. So I'll show you one more example of rally based rally, and then we shall call it a day. There is one example here, but this one is not that clear. So there is this one here, rally, base, rally. You notice how there is 1, 2, 3 basing candles. Mark them very well, like that. Mark them well, like that. So price reacted from the area. However, it did not go very far before it came to retrace. So this is a case whereby you would have moved your stop loss after getting 90 pips, not even 90, I think it is 100 pips. 101. It is 100. After getting 1:2, you remove some positions and then move your stop losses above break even and let the rest run, but you would be stopped out for break even. Okay, okay. But this was a good zone. This was a good zone. Broke structure here. This was a good zone, but it did not work out. So sometimes good zones will fail and bad zones will do what? Will work out. So let's proceed and look for another rally-based rally zone. So now there is a zone here that refused totally to work out, but it was a perfect zone. But it refused to work out. You see this zone here, this one here. This is a break of structure, and then we had this is resistance turns into support, and then we had rally, base, and then a jump, giving a huge move away. Look at that move away, very huge move away, and then a clear demand zone, a clear demand zone. However, price did not respect the zone. If you could see, price came, tried to reject, but it did not have the momentum. Went through the zone, tried to come back, refused, and went through the zone thoroughly up to down. So price never respected that zone. So sometimes things are not going to work out. So you just have to be prepared and risk what you are able to lose, what you feel like you can lose. So I'll show you an example. This was a drop base rally, and this was a good demand zone, guys. This was a good demand zone, sweet demand zone. You find such demand zones, they are very sweet, sweeter than sweet. Look at the zone, guys. Look at the zone. Look at the zone. Price dropped, based, and then rally. Engulfing candle, another engulfing candle, another engulfing candle, breaking structure and making a new higher high. Perfect. And then you enter from here, stop losses below, and then target the previous high at 300 pips, and then go ahead and target the previous high 500 pips, guys. So you would have come to lose around $200 here when you already have 500, so you'd be having 300 in profits. But this is not the one we are looking for. We're looking for rally base rally. So I'll just show you an example, but I'm not getting this. Was also a good zone. Rally base rally, breaking the previous structure. This was a good zone, but price did not react. If it had reacted, look at the move away, guys. You're going to be in things. So I think, guys, I'll end there. I can't see the zones. Okay, there's one here, but this is a big basing. This is rally base rally, breaking the previous structure, and then we mark that zone. We mark that zone like that. After marking the zone, guys, what happens is put your entries there, stop loss is slightly below, and target the previous high, which is this one. This risk reward is not good, but it gave you 170. Then you would go to 300, and then you would go to 400 pips. That is if you were patient enough. So I think that is all I had for today. If you've gotten value from the video, kindly subscribe to the channel. Also, don't forget to like the video and turn on the notification bell such that whenever I put out videos like this, you'll be among the first people to watch them. That is all for today, and have a great day. Bye.